Not so long ago, Circle became one of crypto's biggest success stories, and its IPO exploded. USDC was becoming the institutional stablecoin. Then yesterday, one announcement wiped billions off Circle's valuation. But I don't think investors are reacting to another stablecoin. I think they're reacting to something much bigger. Because OpenUSD doesn't just compete with USDC, it challenges Circle's entire business model. So here's what actually just happened. Over 140 companies have just joined something called Open Standard. Visa, MasterCard, BlackRock, Coinbase, Fireblocks, Google, Stripe, and together they're launching something called Open USD, a new institutional stablecoin. Now you might think, so what? We've already got USDC. That's exactly why this is so interesting. Currently, Circle owns the stablecoin economics. Every additional dollar issued benefits Circle and its investors. But OpenUSD flips that economic model. Instead of one company benefiting, such as Circle, with OpenUSD, the ecosystem of companies who have joined this alliance all benefit. As explained in their article, partners receive all of the earnings from OpenUSD's reserves, less a small management fee to cover OpenUSD's operational costs. The companies will govern collaboratively. OpenUSD will be operated by Open Standard, an independent company with a board made up of OpenUSD's partners, ensuring decisions are made for the collective interest, not a single entity. And the list of absolute Goliaths of every industry have all signed up to adopt the OpenUSD standard. And as we can see, investors noticed this small fact. Not long after the announcement, Circle's share price dropped between 10 and 15%, and within the last month it is down 33%. And now a few weeks ago, we spoke about Wall Street buying toll roads. Well, this is another toll road, except this motorway isn't owned by Circle. It's owned by everyone who is building it. And that is a very different incentive model. And this is where I think the story becomes much bigger. We've spent months talking about crypto becoming infrastructure, tokenization of capital markets, stablecoins, Base's AI MCP, real-world assets, digital settlement and custody. And I actually think this is what infrastructure competition looks like. Companies aren't fighting over tokens anymore. They're fighting over who owns the rails. So, is Circle in trouble? I'd say not as of today. Circle still clearly has enormous advantages. Liquidity, trust, distribution, regulation. But for the first time, its business model has genuine competition. My takeaway isn't that Circle loses, it's that stablecoins are evolving. For years, companies argued and competed over who could issue digital dollars. Now they're competing over who owns the economics behind those dollars. And I think that's a much bigger story. So I'm curious, do you think OpenUSD genuinely threatens Circle? Or will USDC's network effect prove impossible to beat? Let me know below. And if you enjoy founder level content on crypto, news, the blockchain, AI, and wider capital markets, please like this video and subscribe to my channel.